My name is Dan Dorval, and I'm President and CEO of Dorval and Cherney Financial Advisors. I am an independent certified financial planner and author of my book, Financial Success for the Rest of Us, Reality-Based Financial Planning for Mainstream America.
Hi, my name is Leah Woodley. I'm an associate financial advisor with Dorval and Cherney Financial Advisors. Our conversations discuss what it means to do quality of life planning in all areas of your life.
And right now we are in the middle of a crisis. There is a war going on in Iran, and everybody is kind of speculating on what is going to happen. We're seeing some things happen in the market. During situations like this, how do you approach it with your clients?
Well, this is a classic situation of exactly why we focus on quality of life for individuals, because there are always going to be things in the world around us that are out of our control that are going to affect maybe the way we think about things, the news media, friends, family, coworkers, all of that noise of the world around us. And we always come back during these times of, maybe there's a lot more volatility than normal to, okay, control what you can control and align your actions and your resources with what brings you quality of life. And I fully realize we mention this all the time, and yet it's a lot easier said than done. So this is the time where people start to think, well, I heard this, or somebody told me this, and I need to be doing something different. And in most cases, the key to financial planning and advice is to take actions before these things happen. And you might say, well, how do I take actions before something actually happens? I didn't know it was going to happen. Well, that's how you base it on what you're trying to control. So if I'm getting ready to retire in the next year or two, and I maybe have this very aggressive asset allocation because I've been doing very well in stocks, and then now the war in Iran happens. Today we just had a very poor jobs report. And so all of a sudden the stock market starts to go down, and then you react to something and say, okay, now I need to get out, or I need to get more conservative, or I need to do something different. And all that's going to happen is you're going to get whipsawed back and forth and back and forth. And it's going to create more anxiety, more uncertainty, instead of you just saying, okay, I already know that my asset allocation is in alignment with what I'm trying to accomplish. Yes, there is volatility. Yes, I can observe that things are happening in the world around me. Maybe I don't like it, but at the same time, I know that I'm in a position to be able to accomplish my most important goals.
Yeah, I love that. So you're basically saying be proactive instead of reactive because we never know. No one could have predicted that this was going to occur. So that is definitely important. When it comes to investing, I know we value having diversification and especially when it comes to having some international funds in our portfolios. Why don't you speak on that? Is that something that is important during times like this?
Well, when things are happening in the world, if you are well diversified, you almost always have something that is doing relatively well at any given point in time. Now, right now, maybe that's just your most conservative holding, but at the same time, even with stocks, there are times where one portion of the stock market's doing very, very well, and another portion of the stock market's doing very poorly. In recent years, we've been heavily driven by large cap growth stocks that were focused on AI and technology. And there were, meaningful segments of the stock market that were negative or certainly not performing as well. And then you look at it and you go, well, why do I have those things?
Hmm.
And the key is that when these switches happen, when these events occur, and all of a sudden, just like that, all of a sudden, a different part of the market might be doing much better. So right now, you're talking about oil prices have spiked. So maybe your energy stocks, which have been underperforming for quite some time, maybe your energy stocks are doing very, very well. And so we don't try to predict those things ahead of
Hmm.
time. What we will do is we will express an opinion based on things that we can objectively observe, like valuations. If part of, for example, the stock market gets to a point of where it's very overvalued relative to historical standards, we might start to trim that back, not as a prediction or, we're assuming there's going to be a war in Iraq or Iran, excuse me. And so we don't do it based off of predictions. We just look at it and say, well, if one part of the market is very much overvalued rather than another part of the market, maybe we want more exposure to the thing that has greater upside going forward. And so we do express these opinions, and sometimes there's nuance in the idea of like market timing versus, just staying the course, so to speak, with a diversified allocation. We are always going to be well diversified. Always. That works
Yeah.
in almost all cases as far as financial planning goes. But at the same time, that type of diversification or the amounts into each component of that diversification do shift and evolve over time.
Yes, very, very, very important. So, did you have a lot of clients reach out to you when headlines started coming up?
I get that question all the time. People are like, "Oh, you must be super busy right now because people are reaching out and asking questions and they have concerns." I don't have any clients reach out over things like this. It's very rare. Sometimes a client will express a concern or something like that, but we have them conditioned to know, and we communicate ahead of time that they are well positioned to be able to weather these types of storms. That is the whole point of having a financial advisor, is to be able to say, okay, your investments or your resources are already aligned with what you are personally trying to accomplish. So if somebody's getting ready to retire and they say, hey, the market is down, can I still retire? It's like, yes, because we want you to be able to control what you can control. If any plan is being like undermined by something outside of your control, if you say, I can no longer retire because of things outside your control, that was a very poor plan, in my opinion. It's
Yeah.
not investments that drive your plan, it's your goals and what you're trying to accomplish that drive your investments. It's the other way around. So we did do a client video just updating them, and this goes out to all of our clients, just updating them on where we're positioned, that we're paying attention. We, certainly want them to feel like their advisor understands what's going on and is reassuring them that the approach we're taking is designed exactly for these types of shocks to the system.
Yes, that is very important. I'm glad that we were able to get in front of that. And like you said, we have conditioned our clients to focus on quality of life and their goals and not just what's going on in the market. My last question is, a situation like this, is there any way to use this type of volatility and take it to our advantage, use it for our advantage rather than as an opportunity to panic? What would you say?
It's a great question because one of the things that we do is we monitor our investments looking for any sort of substantial deviation in returns across different asset classes. So right now you'll see emerging market type funds are down substantially since the war began. So in 1 week, they've dropped significantly. And we monitor that deviation. And once there's a big enough separation between any asset classes inside our portfolio. So it might be emerging markets versus a certain type of bond, or it might be large cap growth stocks versus small cap value stocks. If there is ever a substantial deviation, and substantial is a non-technical term, meaning it's
Mhm.
it's something more probably art than science, but we monitor that looking for those points of separation. And when it gets extreme, we do a rebalance across our portfolios. So that rebalance is something we'll do across all of our clients that have accounts that there's no tax ramifications on these
Mhm.
transactions. So we might be selling the thing that is, higher. Now, we might not sell all of it. We're selling a portion of it. And then we might be buying the thing that is, significantly lower, and we're bringing them back into balance. And this is something that helps us mitigate volatility. So during COVID, for example, there was massive amounts of volatility. We had a couple of months that were almost straight down, and the stock market lost almost a third of its value in a couple of months. And we did a rebalance and bought stocks right at the time where the economy was shutting down. And that was a very difficult thing for us to do,
Mhm.
knowing the uncertainty of what was going on with COVID, but it's just part of our process. And then, of course, the stock market recovered within the next couple of months, and we did another massive rebalance. And so, if this war goes longer than we expect, or it goes poorly, or something changes in a big way, if there is a substantial separation in asset classes, we are absolutely going to rebalance. And there is no cost to our clients to do that. So if there's another major separation within a month, we'll do it again.
Mhm.
And we're constantly monitoring for those opportunities.
Yes. Well, thank you so much for sharing that insight. Is there anything else you would like to add?
I think right now the key is to, if depending on the media sources you're getting your information from, it can be very stressful to focus a lot on the media. The
Mhm.
media is designed to inflame your emotions in whatever way your chosen form of media does. And so that creates this idea that I have to do something. I have to do something. Things are bad. I have to do something. And you really might want to shift away from being exposed to that type of a media source.
Yeah, block the noise.
Block the noise. Yeah.
Yeah. Well, thank you so much. And until next time, have a good one.
Thanks, Leah.
Thank you.